An economic shock of unknowable scale is upon us, and shares in companies are being sold off.
The terrifying scale of Australia's bushfire disaster is beginning to emerge.
Away from Wuhan, coronavirus numbers are rising.
China is urging its citizens not to travel abroad.
Circuit breakers are there to try and prevent panic selling, which is what you might be looking at right now.
In 2020, Australians have been tested like never before.
It's a year many of us will never forget. 2020 begins in flames, costing lives and homes and devastating businesses. But an even bigger catastrophe is about to hit. Australia records its first case of coronavirus on January 25, but it's still considered a China problem. A ban on tour groups leaving China hurts our tourism sector, already reeling from a black summer of bushfires.
For many businesses, I think this is already a crisis situation.
China's central bank tries to keep its financial markets functioning, but global markets seem oblivious to the looming disaster.
The S&P 500 and NASDAQ closing at all-time highs.
The All Ordinaries zoomed past the pre-coronavirus peak of January 22nd and hit a new record.
Some of Australia's business leaders are cautious, but seemingly not too concerned.
So far, the impact on our markets has been relatively muted.
Our shipments are continuing unaffected.
We can pivot our focus into the domestic market.
I'd rather be Qantas coming into these issues with coronavirus than any other airline in the region.
But as the virus reaches Europe, it becomes clear this is a global problem. Markets post their worst week since the global financial crisis, with equities, oil prices and bond yields plunging.
I don't think anybody could have predicted we were headed for a 10% crash in 5 days.
This is the fastest 12% loss in history.
The RBA cuts interest rates to a new record low. The falls across equity markets intensify, triggering circuit breakers on Wall Street.
A market-wide trading halt for the next 15 minutes.
The World Health Organization makes it official. COVID-19 is a pandemic.
We expect to see the number of cases, the number of deaths, and the number of affected countries climb even higher.
Governments worldwide begin pumping fiscal stimulus as economies grind to a halt.
We are having a massive economic sudden stop.
Australia announces its first cash injection. In mid-March, the ASX plunges almost 10%, its biggest one-day fall since the stock market crash of 1987.
Sell-offs, once considered disastrous, are now routine.
Australia bans international travel, and Qantas stands down 20,000 employees.
The workers have been told to use any accrued leave to tide them over till at least the end of May.
The RBA holds crisis talks, taking the knife to the cash rate for the second time in weeks, and for the first time announces it's buying bonds. The Australian dollar falls to an 18-year low. In the UK, the government steps in as workers are laid off, helping to cover salaries. Australia starts to shut down. Lines form outside Centrelink offices as thousands become unemployed overnight.
Australians who have lost their jobs, lost hours of work, businesses that have been forced to close their businesses. These are heartbreaking events in our nation's history.
In the US, Congress passes a record-breaking stimulus bill. By the end of March, it becomes clear more support is needed here as well. The government unveils its JobKeeper wage subsidy package, and childcare becomes free. The price of US oil turns negative for the first time in history. The Reserve Bank governor addresses the nation, warning unemployment will rise to 10%.
We are likely to experience the biggest contraction in national output and national income that we've witnessed since the 1930s.
It takes just 3 weeks for almost 800,000 jobs to be lost. One of Australia's major airlines collapses. Virgin Australia enters administration. In the US, unemployment reaches historic levels. 20 million jobs are lost in April. Australia's economy contracts in the March quarter. We're on track to enter our first recession in 29 years.
We have avoided the economic fate and the health fate of other nations.
His argument appears to be that our recession's a bit better than the American recession.
As restrictions start to ease and businesses reopen, one state is forced back into lockdown. China is very much in recovery mode after first quarter GDP plunged. Here, unemployment surges.
Tonight, more than 1 million people out of work. The unemployment rate creeps up to 7.5%, and the real figure may be a lot higher.
JobSeeker and JobKeeper are extended, but at a reduced rate. In the US, the S&P 500 recovers all of its COVID losses, closing at a new high. Here, the share market regains 35% from its March low, and gold makes history, topping $2,000 an ounce. In September, GDP figures confirm Australia is in recession. A delayed budget in October details the recovery plan.
This is a heavy burden, but a necessary one to responsibly deal with the greatest challenge of our time.
After 111 days, Melbourne emerges from its hard lockdown. National house prices rise after 5 months of falls. US voters elect Joe Biden as president, but there's no concession from Donald Trump.
Here we are again in the unusual position of not only interrupting the President of the United States, but correcting the President.
The RBA announces it'll buy $100 billion of government bonds and cuts the cash rate to near zero. But against their wishes, the Australian dollar continues to rise. Saved from collapse, Virgin Australia is handed over to its new owners, just as state borders start to come down.
We welcome you to Queensland from the 1st of December.
Work on coronavirus vaccines is charging ahead, and markets continue to defy economic fundamentals. But the virus is running rampant overseas, and cases continue to arrive here in hotel quarantine. With central banks holding trillions of dollars in assets and governments pumping cash into the global economy at an unprecedented rate, debt and deficits have soared. The cost of 2020.